Hey guys, good afternoon. So we had a bit of a volatility come in today, better than yesterday. So we came down to our monthly one right there. Look, I mean, how perfect is that, right? And up to those monthly means. 19 is the dealer max pain up here. So that is maximum pleasure for the dealer. They make the most money if they can get the market to close up there by this expiration, which, if I'm not mistaken, it's the 22nd. Let's take a quick look at that. The 20th. Let's see. Max pain is currently 19. It was this morning. Yep, still 19. And that's the 20th. And the 27th goes back to 1564. So we go up and then back. So the 20th to the 27th. So by the end of the month, they're going to want us back down. So that is going to put us to the upper end of our monthly for the VIX. I mean, look at that. Came right to my monthly one and bounced. I know y'all are seeing this, right? All right. And then the ES monthly is going to come down here to its mean 6,300, 6,330, 6,350, and then back up by the end of the month. So if we get to the lower end of this, it'll be coming back to the mean by the end of the month or higher. If it only comes to the middle and then bounces, we could be breaking new ground going into September. I mean, who's ever heard of that? So my guess is that we'll get a fast down to our lower monthly ones and then back up to the middle for the month end, and then it can go down. So that would give you this down, up, down. There we go. How about that? That would make everybody in Jackson Hole very happy because they can't stand that we've had a 30 something point, I mean 30% rally, 30 more than 30%, like 33% rally since April, right up to the upper monthly one and then turn around and you see this, it's on the very top of the monthly one. I mean, look, to the tick, just like my VIX to the tick of that monthly one. So these markets, as I showed you today with the little daytime range, are very algorithmic. And dealers algos broke that straddle range today that we showed you earlier in our post this morning. So we had a straddle range, the call up here, and then the put right here where it inflected. So we got them both. And when this inflection broke here, that's when you picked up the dealer and he took it to 2.5 times the R vol range of 23 this morning. Now that R vol grew, right? It our ranges are not static. It started at 23, but it went up to 23.75. So the R vol is now at 66.50, and the H vol is, oh, I'm sorry, the R vol is 55.25 and the H vol is 66.50. So from 55.25 to 66.50. So 55.25, watch this. Look at that. Are you getting goosebumps? So that's where the dealer algos stopped participating, right? That's exactly where they came in and stopped participating to the downside. It's extremely algorithmic. So you do see that, right? 55.25, 1 day PT3, and this is my R vol. What do I mean by R vol? That is realized volatility, not relative. I'm not comparing it to anything. This is 1 day volatility, what the expected range is according to my statistical calculations. One period, that is current volatility, and I have my own projection of what I think it's going to be, and it was just that. It was 55.25, and the dealer stopped trading. Their algos just shut off. No more, no more. That's the Aerosmith song. I should have played that. It's a great song. Anyway, so we didn't get to the bottom, which would have been perfect because the daily 3 is just below it, and then the 3 times that 23 range was right above it. So I bet if I added that 75 cents to this, I could stretch this out to the daily 3. So it started at 23 and then went to 23.75. So that would have given me 3 more ticks per box. So that would have been 369 ticks. Yeah, I would have gotten down there to the daily 3 H vol. So 3 times the R vol is 1 time H vol. And more importantly, tomorrow, when we get new bars and levels, the R vol will probably be, you know, sitting very close to even to H vol. And that will make it an easy tipping place. So right now it's 55.25 to 66, 10 point. That's likely to narrow tomorrow even more. What's a 10-point spread? And that's what they'll use too for their positioning. So they'll use that spread between the H vol and the R vol for their risk. So it's starting to make sense to you. All right. And then we can break this down not only to a weekly, monthly, quarterly time frame. You can do this on hours, right? We can put up a market analyzer and get the entire hourly time frame. If I can find it. Got so many templates. There we go. Hourly volatility ranges right here. And then here's 24/7. Let's just do that. All right, so here's my daily. I've got a Globex, the overnight session with the point ranges. The RTH session has its own point range from 8:30 to 3. The initial balance. And then here's your 30 minutes. So that's the 1 hour right there. So here's your 30-minute, 15-minute, 10-minute, and 5-minute range. So you can break this down for your algos by minute. We can also do 8 to 9, 9 to 10, 10 to 11, and that is your spread. So you can take your 24/7 spread to your hourly spread, and the hourly spread would be 14 periods between 8 to 9 versus 24/7, 8 to 9. So the 24/7, 8 to 9 would be like R ball. And then the 14 period would be like H ball for the time series. It's so cool. And they use that spread as well between the H ball, R ball of 14 period to 1 period on an hourly time frame. I know, okay. But anyway, that's how I construct my algos when I'm creating my algorithmic trading strategies for lower time frames, when I'm trying to manage risk that way. And depending upon the volatility, if the volatility is inside, the 1 to the 2, then you know exactly which, volatility level that you're going to be trading. You could be trading, a 15-minute range if it's inside the daily 1 to 2, right? If it's between the 2 and the 3, you're going to want to kick that up to a 60-minute, time frame. And if it's above the 3, going out of the tails, R ball over H ball, then you definitely want to be trading a higher time frame risk, like your RTH or your daily 1. hmm That's what the dealers do. And then, of course, like I said, you can spread between the H ball, R ball. Give that a try when you're putting your algos together. See how you like it. All right. If you have any questions on that, let me know. I talk your head off about algos. And so the reports, I have to figure out how to get a bunch of spreadsheets to, or my, not spreadsheets, but the market analyzers. When I make, you know, 40 spreadsheets per market to run my numbers, how to do that times 7 instruments, all within, a couple of hours in the morning with all the other data sources that I have to collect. It's going to be so much better when I can get this integrated into the quick strike platforms, because then it's all going to be instant, automatic. Um, and that's really the ultimate goal, is to have that instead of relying on this method. But in the meantime, we can do our reports. But it sure would be nice to get a live dashboard. But so I'm going to keep relying on the current method of generating the reports, and not be able to use Colab after all, until I can figure this out. Maybe there is a way for me to take a screen grab OCR and convert it to a spreadsheet instead of a text file. But that would just take as much time to figure out and do that. Maybe Python is pretty good, giving it a bunch of commands to do that. But with all those steps and everything, I'm a little bit nervous about it. There's just, an enormous amount of data that goes into these calcs. And I'm running 5 different option spreadsheets that have different values in the spreadsheets, the way that the calcs are being run, because I'm separating call gamma and call open interest, to put gamma and put open interest on 2 different spreadsheets, and then 2 prior day spreadsheets. So there's 4, and then 1 current day spreadsheet that just has a single row of gamma. So each, it takes 5 sheets to build this. I'll have to figure a way out to get all of that onto one spreadsheet. Would make it much better. So to talk about me being, technology challenged, um, it's true, and I'm stumbling, through this, but I think I've done a pretty remarkable job getting it to this point, and it is working. So that's 99% of the way, and the code is really good too. So if the code wasn't good, I wouldn't be messing at all with this. But I mean, I love it. Is these these levels are so precise, and I mean, you can just see here this white line right there. That's a daily one. You know, there's a reason that it came up to the daily one and then faded back and then went up to the daily one and is fading. It's because the dealer uses those ones for their risk. That's their risk line. So when it broke right here, they moved their risk out and then moved the risk up right there. So they moved it from this one here to here and then to here. So they had moved their risk down, and they're not going to let price go back inside and make them back up or hedge back inside. They're defending it. They had already moved their risk out. So once you understand the concept of this bell curve, then seeing the order flow on the screen makes so much more sense to you. And we can measure all types of time frames and periods, HVAL, RVAL, hourly. Um, we can do it all, and then match this with the options so that we can get a very nice suite of signals that you're not getting anywhere else. I mean, this is all original work. This isn't like just copying and pasting gamma or stuff that's just repackaged in 15 different ways. These are things that I'm putting together myself and using the Jats PT levels with this. I mean, I've got Jats PT levels being analyzed with implied volatility with my realized volatility, and getting ratios and numbers so that I can get an idea of dealer positioning to see if we can get a signal with that. So I'm absolutely doing things that I think are pretty exciting. And so this is what I would like to integrate into Quick Strike. I have taken a long time to work on this, and I have my models. The calcs are all done. Everything is ready, and it's now working. It is a working model. I'm generating reports. I just would like to, here's the framework, describes everything. I would like to get this on the QuickStrike platform and integrate it, and then have a dashboard where we could get color coding and a signal gauge to describe what the level is and how that relates to current price any better than I'm already doing with just the RVAL HVAL. Because if we can see, for instance, a report where everything is laid out, where our, gamma flips, open interest levels, hedging zones are, our playbook, and then see where, if it's positive or negative. The AI engine has trouble with this, putting the colors on the right side. I'm trying to get the red on the left and the green on the right, just like the bell curve, but it kind of struggles with the color coding. But at least I've got the numbers. That's the important thing. And get a gauge so that you can understand, is it, you know, just a little positive, or is it, really negative. I do need to get these colors fixed. I'm working on that. But that's going to help you at a glance understand once you start working with this and seeing, I'll have the same dashboard up and the same signals, and then eventually get into this tiered signal setup. W- one A's are not very often at all, but you can get a 2B or a 2, or B or a C signal, 1, 2, or um, more frequently, and they're more reliable. So, yeah, I think it's going to be good. I'm excited about it. And I think, again, like I said, I'm bringing something that is unique and original, and that's the important thing, not fake. Nothing fake about this at all. You would not believe the work that I've put into this. So, but the underlying structure is what is important, and it is, uh, easy today to see that it went 2.5 times the range and stopped visually, and that is the high-low range, not just off the open or close. So I took the 23 points, instead of running it off the open or close like I normally do, that's what the horizontal lines are. I ran these boxes of the point range from the high, and from the high-low range, it went to 2.5. So that's very exciting. So just R ball, H fall on its own without the options, um, showed what was happening. You could just see it stalling out right at the statistical level. But if I were to go to my options today and look at these levels with my signals on them, um, we could see, were there any corresponding, um, let's take a look at the report. So we got down to 64.20, and the other inflection 64.75, 64.50, and 64.20. Here was today's report. Not really anything really showing bearish at this morning. But we've got some pinning occurring down a little bit lower. Yeah, all the levels are lower in this um, today. I need to take a look at that. Take a look at these levels, and for tomorrow, we might get a good peak jump on tomorrow's levels today. Maybe I need to have a little bit of an adjustment today, but nothing in my report that would have given us any help today. All right, but I'll definitely look at those levels tomorrow. 63, 70 through 95. So 63.70 is right here in the middle. So if it's building there, we know why. It's right in the middle of my range. And 6,400, that makes sense. So there's my report today is catching that this is an area that's building on the chart in the options. These are options. So they're going to be coming down to the middle of the range. I'm going to try to get the algo for the options to focus more on the current. I did have, just to be honest, to be honest with you, I have been trying to focus on the higher time frame um, to see if there was a confluence with today's range. So this was outside of today's range. So there was a missing piece in the algo today. I need to get that baked in. Normally, I just want it in today, whatever's going to be inside of today's daily 1, 2, 3 R vol or H vol. So this 3 to 3 up here and down here, this would have been our playing field today. And any of the higher time frames that fell within side of this could be, interpreted. And that will get us a more actionable option setting, I think. So I've got a little bit more refinement to do on that latest version that somehow slipped through the cracks where it didn't focus on today's range. I'll fix that for tomorrow. All right, well, that's all I've got for you. Appreciate your time, and let me know if you have any questions. Thank you so much. Y'all have a good night, and we'll see you tomorrow. Talk to you soon.